Today we have Jonathan Twombly. Jonathan, thank you for joining us today. Tell us a little bit more regarding your background and how did you get into real estate?
Yeah, well, thanks very much for having me. I was actually a lawyer in Wall Street for about 12 years before getting into real estate. I had been practicing commercial litigation, which was, basically representing large corporations in very large fights with other large corporations over big piles of money. Uh, Towards the end of that, it was heavily focused on real estate, but I was very dissatisfied with being a service provider. I really wanted to be a principal, and towards the end of my real estate career, I started looking for ways to get into uh, business of some kind. I'd always been interested in real estate, and I started doing a lot of networking and trying to figure out how I might break into it. I ran up against a pretty solid brick wall when I tried to get into it on an institutional level, because I was coming in pretty late, and it was also it was right after the crash in 2008, 2009. So there were a lot of people who were out of work who had really good resumes, and I just couldn't compete with those folks. But to make a long story short, I wound up running into somebody in my networking travels who was putting together a multifamily investment startup, and she asked me if I would join her, and that was how I entered the field originally.
But I know your story because I'm a bookworm. I read like I'm an insane person. So power to the people that read. But the first venture didn't work out well, right? So you ended up having some deals that didn't work out, and then you went and got another partner, and that the second one that did work. Can you run us through that?
Yeah, absolutely. So the first partnership, we were investing in Louisiana and Texas, down in the deep South United States.
Yeah.
And we had gotten a couple of deals under contract, which took us quite a while to accomplish because we were new. And those deals wound up not working out for a couple of reasons. First, we had a deal that, when we brought these deals to the lenders, they were very excited about them. They were very good cash flowing properties. But at the very end of the process on the first deal, after we'd gone through all of our due diligence, the lender sent down its underwriter to look at the deal. It's always sort of the very last step in the process before they give you the loan, and came back and said, we're not going through with this. We're not going forward with this loan. And it was a big shock because they had been very gung-ho right up until that point. And then when we asked them, what was going on, why was it that they weren't going forward with the loan, they gave us this list of reasons, which was just really crazy. Like, the breezeways were dirty, and there were too many vacant apartments, which was actually why we were buying it in the first place. And they found a golf ball that had come through a window, and they actually put that in the report. There was a broken window with a golf ball, that came through it. So for a $5 pane of glass, they weren't going to do this loan. So
they're making up excuses to get out of the deal, right?
Exactly. Yeah. It was just all pretextual. I don't know whether the reason was that they became uncomfortable with Louisiana, or because they became uncomfortable in general. I think a lot of lenders were still quite skittish after the financial crisis, and they might have just been looking for a way out. So we exercised our financing contingency and got out of the deal, but we lost a lot of money, all of our expenses. We had legal expenses, we had loan underwriting expenses, we had due diligence expenses. We lost all that money. It was very, very painful. And then a few weeks later, I think that experience made us very skittish. A few weeks later, we were looking at the second deal that we had under contract, and my partner found that there were the setup was that there was one water heater for every 4 apartments. Now, again, knowing what I know now, this is not a very uncommon setup for apartments of that vintage, but we let ourselves get spooked by this, and we terminated the deal. And again, same thing, all kinds of expenses that we had to to bear ourselves. This was a very painful experience. And once we got through all that, we had already, I think, discovered some issues in terms of our approach to things. And I think we had each reached the conclusion independently that we didn't really want to go forward as partners anymore. So we ended the partnership, and it was all very pleasant. There was no acrimony, but we decided to go our separate ways, which I think was a good decision. But there I was now, 18 months later, or almost 2 years later, having left my job as a lawyer and really not knowing what I was going to do. And I sat down with one of my investors and for dinner and said, I might have to go back to practicing law. And he said, no, don't do that. Why don't you and I form a company together? And that's how my current company, Two Bridges, was founded. So that partner is silent in the background, and I operate the company.
And regarding the first deal, how did you, after that period, when did you get your first deal? Run us through the numbers.
So after I formed the second company?
Yeah.
So it took about 10 months from the time that we started the company till we got the first deal under contract. We had, as a new group, it's very difficult to break into this business, to get brokers to take you seriously. And I actually had a very well-connected person who was working for me as a sourcing, deal sourcing agent. But even he was having difficulty helping me break through because, I was the principal and I was unknown and we didn't have any track record in the market. Nobody really knew us from Adam. So it took a long time for us to sort of network our way into a position where people knew us, they knew we were serious, they knew we could close, and were willing to take a chance on us.
But the person that you had in your team, because as you know, David Rubenstein from a private equity, the Carlyle Group, he had a similar story because he only had basically connections, and all the technical people were the people that he connected with. You and I, we have a similar story because we come from different backgrounds, and then starting to get into real estate, and you face this huge brick wall because nobody knows you. You think you're a tire kicker, so nobody takes you serious. You need someone in your team that they do take serious, right? And that person, the deals that you got, do you think they were good deals or kind of so-so deals? Can you run us through the numbers of the first deal that you got?
Well, the first deal in the new partnership, or the first deal that we...
No, the first deal in the new partnership.
In the new partnership, yeah. So the first deal in the new partnership, yeah, I mean, I did think it was a good deal, and I had, this, for lack of a better term, partner that was helping first deals, who was very experienced at underwriting, analyzing deals and acquiring deals. But given my experience in Louisiana, where the things that we were looking at were very low quality, I mean, they're really C- deals. As soon as we found this first deal, and literally when we drove up onto the property, we knew right away that it was different. I mean, it was much nicer looking property. Nobody was around during the day, which means they're all working. The cars that were there were newer cars, so it clearly had a good feeling to it. And running the numbers, it obviously made sense. We were able to buy it at that point in the market cycle at the cap rate that we targeted. The deal was a $4.1 million deal, and so that's the kind of basic outline of it. It was 102 units. So $4.1 million. Yeah.
At this time, because I'm going through the numbers right now, and deals are harder to come by now because the numbers just don't make sense. Cap rates are getting a little bit compressed. The market is reaching all-time highs. What are you looking for now? You just have a dry powder and waiting for this part to end. How are you operating now? Just waiting?
Yeah. So we have really been on the sidelines for about 2 years now. We started getting priced out of deals after we closed our fourth deal. We were still able to get good pricing up through the fourth deal that we closed. That was in 2014. We noticed pretty soon after that the market started running up. By 2015, we had another deal under contract in 2015. We wound up not closing. That was still also priced relatively attractively, but we had to stretch a bit on that deal for sure. I mean, we became more aggressive in our underwriting than we had been previously in order to win the contract for that deal. And kind of as aggressive as I was willing to go. I wasn't willing to get more aggressive than that. After that, the next deal that we bid on, it definitely became, we were brought an off-market deal by brokers that we really know well. And we were very aggressive on that deal to the point of where I felt very uncomfortable. I submitted my bid, and my first thought was, God, I hope they don't accept this bid, because it was really, it made me uncomfortable. And they came back and said, this is 20% below what we're looking for. And it's been like that ever since. So we have really stayed on the sidelines. We still see a lot of marketed deals from brokers, but anything that's widely marketed is going to be really overbid. And we've just been focused on operating the assets that we have and bringing more investors into the platform, with the idea that we're going to sit tight and wait until the buying opportunity comes again, which I think is it's in sight now, I believe.
But if you were to, I know this is kind of a catch to 2022 that I'm asking you, but if you were to start out now, the younger Jonathan Twombly, you wouldn't be buying anything now, right?
It would be very difficult. I have a lot of people who reach out to me, who've heard about my story or see me in social media and reach out to me asking for advice. And they often come to me with this, this kind of attitude, which is, I'm such an idiot. I can't find deals. What's wrong with me? And I tell them, look, it's not you, it's the market. You've come into this at a very, very difficult point in the market, and you shouldn't be beating yourself up about this. And in fact, the fact that you're having trouble finding deals that make sense shows me that you have a realistic model that you're using to evaluate deals. Because if you thought deals were making sense right now, I'd say, I'm not really sure I agree with you. I think you might be taking on a bit too much risk, especially starting out. So yeah, I definitely think for people who are coming into this now, it is very, very difficult. And what I typically advise people to do is, use this time to be educating yourself and getting everything ready to take advantage of the opportunity when it comes. Because I think what will happen to a lot of people is that they'll kind of sit back. They won't use this time effectively. And then when the buying opportunity comes, they'll be playing catch up and they'll miss it. So now is really the time to be getting prepared to, be getting your model ready, working on your network, and putting your investor network in place, putting your team in place, and being in a position where when the deals are more attractively priced, you're ready to jump on the opportunity right away.
I know this is really hard to know, to figure out, but in your opinion, just a rough estimate, how long do you think that will actually take in order to get the cap rates to more kind of buyish levels again?
Yeah, I mean, that's the $1 million question, right?
Sure, I know.
My feeling about it, and it's really just a feeling, is that I think the correction to take place in another 12 to 24 months. I don't think it's going to be because there's not going to be any kind of great crash I think it's just we have a normal real estate cycle on our hands again, maybe a little more aggressive than usual, but I don't think this is the 2007, 2008 variety. I think it's just going to run out of gas. I think there are a lot of people who are priced out of the market right now. And at some point, everybody will be priced out. Deals won't make sense unless they're really, really long-term holders, or they're institutional players that have capital they have to place and they really have no choice about it. I think those people will continue to buy in any cycle. But for the people who need to generate better yield on their deals, I think you just reach a point where they can't generate that yield anymore, no matter how much they cut their fees, no matter how much they structure things to get rewarded on the back end. They just can't, they just can't make it work. And I think we're nearing that point. So I'm giving the market another 12 to 20 months to run as it is before we see a correction. Now, how long it takes prices to clear after that, it could be another year after that before we see prices start to really to clear. Not excluding the real distress where people are foreclosed on, but I saw this happen in the last cycle. We got involved just after the crash, and a lot of the sellers were sticking to their peak pricing, and they stuck to it for a very long time. And even those first two deals that we got, those deals had been on the market for probably a year before the seller brought the price down to a level that made sense. And I think a lot of sellers will stick to that high pricing, hoping that they can find, some stupid money to buy it still at that price or what have you. But I think you'll see that same kind of stickiness on the way down that we saw last time.
Regarding your criteria, what you're saying, of course, we can't compromise our criteria, but would you kind of have a little more latitude for a deal that probably is not in the teens, but kind of above in a 5-ish, 6-ish, or you just wouldn't look at the deal at all at this time?
Well, I mean, at a 5 or a 6 cap, I just can't make the numbers work because, for my structure, which involves using investor money. Now, if you're using your own money, then and you have a very long-term hold in mind, then a 5 or a 6 cap is still okay, right? I mean, if you're not worried about generating money for other people first and then paying yourself after everyone else gets paid, that cap rate is okay. I think the issue is when you have a model like mine and a lot of other syndicators, dealing with retail investors, they're looking for a 7% preferred return or an 8% preferred return. To go to them and say, the market right now only supports a 6% preferred return, they're just going to say, yeah, I'll just keep it in cash. Like, I'm not willing to take on that kind of, the risk. They perceive these deals as riskier. I think when you're dealing with more institutional capital, first of all, those sources understand where the market is. They'll look at a 6 cap deal and say, okay, this is not bad in this market. They need to place that money. And they and their investors understand the state of the market, and their objectives are different oftentimes, right? Because their objectives may be asset preservation, or their objectives may be just generating a return, whatever it is, because they don't want dead capital sitting around. They also, I think, appropriately price the risk of the assets, where with retail investors, oftentimes I think they perceive the risk as being higher than it is, and because of that, they want a higher return than maybe is justified. But that's just the market that we're dealing with. So it becomes difficult, certainly at a 5 cap, to make that return even with leverage. And now that interest rates are, when you get to a 5 cap, there's not that much leverage with interest rates in the 4s. It's very difficult to make that delta, to get that extra, for the leverage to really count for you to make that extra return. So that's kind of where we are with that. That's why we're not doing deals.
At this time, now that it took you 2 years and a lot of beating in order to get you where you are today, and now you're kind of in a standstill because you are waiting until the next good wave comes by. How do you see yourself and your company towards the future for the next couple of years?
Yeah, so as we're kind of waiting out this market cycle, what we're focused on is, as I mentioned before, marketing the company to bring more investors in to be ready for the next time around, because I do want to be ready for the buying opportunity when it comes. So we're focused on that, on just bringing people into the platform. And then we're also focused on education programs to people who want this to get into it, and for them to be prepared for the opportunity that's coming. So for people who are trying to break into the business and having not much luck, as I said, now is really the time for them to be focused on educating themselves and getting ready for the opportunity to come. So we're focused on working with those people and helping them to learn how to do this business.
At this time, if you were to go back and speak with you again, the younger self, what advice do you give yourself when raising capital? What from your experience, what you have learned so far, what do you think that the more important things when raising capital?
So I would actually take it a step back before the capital raising stage, because in terms of the actual capital raising stage, that wasn't so much of a problem for me. The real problem was that I didn't market the business as effectively as I should have and as early as I should have. So growing the pool of investors was something that I would be much more aggressive about if I were to go back and do it again. And when I look around and I see some of the people that I know who came into the business around the same time as me and whose businesses are bigger, the real difference between them and me is that they were very effective and aggressive marketers of their businesses. So, obviously there's some kind of conversion rate when you're trying to raise money for a deal. Whatever that conversion rate is, the more number of people you're talking to, the greater, absolute number you're going to convert at whatever conversion rate you have, right? So the key is to be marketing yourself, as many people as possibly can, as early in the process as you can. It's so that you're not scrambling to try to find investors once you have a deal. You want to have that investor set established as early in the process as you possibly can.
Because when you started, basically you had people in your network. They did take you serious because they knew this is a straight up guy. He's just working for himself. Now it's just kind of transferable skills for a different area. So they know you kind of, this is a responsible individual, but he's doing something different. When you try to raise capital, one of the things, and I've been through this before. They don't know you, and when you have a deal and you are presenting to people that you haven't built that trust yet, probably that's not going to work. So I hear a lot about have the deal first and then the money would follow, but that's not quite accurate, is it?
Absolutely not. I've heard that too. People throw that around all the time, and it's really not true. I mean, it's true in the sense that if you have the network already built, then yeah, you can raise the money if you have a deal, if you have the network in place. But if you don't have the network in place, it's not like the money is going to magically appear out of thin air. And as you said, if people don't already know you and trust you, it's going to be a much more difficult sell. Now, one other thing that people can do in the capital raising sphere is not just to make relationships with direct investors, but to make relationships with other people in the business. Because oftentimes, lots of syndicators have the same problem. Either they've got deals or they have money, and oftentimes they don't have them at the same time. So you may have friends or relationships in the business who have a bunch of investor money that's kind of there unused that they can tap. And if you have a deal, you can JV, you can joint venture on the deal. So I think it's also important to make connections with other people in the business so that you have the opportunity to leverage their networks when you need that capital. But it's really, as I said before, it's really critically important that you be building your network very early in the process, long before you have any deals. And you can do that by talking about what you're doing, about you can drop a sort of mock sample deal that where you say, this is the kind of deal I'm looking for. If I were to find something like this, would you be interested? And then you need to track all that. Like, you can't just have those conversations and then just hope to go back to those people in a year. You have to have a system for tracking them, for getting them into your mailing list, for keeping them warm over time. So there's a whole process that you need to follow to do this.
Jonathan, I usually wake up about 4:30 in the morning because I'm an early bird, and I know you are the same thing as well. So what I wanted to understand is, for people that are trying to figure out how to be more effective at this specific time, they're trying to educate themselves, but also trying to develop their networks. So how do you conduct your day? What do you do on a daily basis that leads you to have better results?
Well, I try to spend some time every day engaging in social media in places where it makes sense, where I can, showcase my expertise, help people, help answer their questions. So, I'm involved in places like Bigger Pockets. I have a Facebook community that I'm growing where I give people advice, and answer their questions about multifamily. Those kinds of channels are very effective in helping you get beyond your immediate circle of people who know you. It's at this point, it's no secret. I mean, becoming an authority in your field is really one of the best ways to elevate your presence and attract people to you. So that's something that you can do. And even as a new investor, if you are able, if you become very well educated about the topic, you can start to contribute value to people in forums and start to attract your tribe that way. But I think you also really need to be talking to people in person, and you can leverage your network to do that. You can ask the people in your network for introductions. When you get people who sign up to become part of your platform, you can ask them for introductions, and that way you can continue to expand your your footprint of people who know you bigger and bigger and bigger. But also, I try to write as much as I can to keep my blog up, so that there's I have content going out, posting the content on social media, things like that. So it's really just a strategy, a marketing strategy of providing content, providing value, and putting it out there.
So basically, just to get the point home, you're basically using all of your efforts to enhance your network, increase your capabilities to get more people around you, so you become an authority, and it becomes easier over time in order for you to get what you need, basically.
Yeah, and you have to do that consistently. That's one lesson I learned. I did it earlier on in my business. I did it in a kind of haphazard way, and I would do it from time to time. Now I try to do it in a much more methodical way, which is to do it pretty much every day. Although the one exception to that is that I try to do it in ways that provide value. So for instance, I don't go onto a public forum and answer questions just for the purpose of answering questions. I try to reserve it so for times when I can really add value, because I want to have the maximum impact. But consistency is important. So I'm in there every day looking for opportunities where I can add value and help and showcase my expertise. But I think you dilute yourself if you're just participating in forums without any kind of strategic objective, just for the point of being there. I think it's much better for you if you're only people will listen to you more if they know that when you talk, you're saying something that's valuable, as opposed to just trying to be noticed.
So basically, instead of having yourself scattered all over the place, you just choose one topic, devote the 10,000 hours plus to that, and then become super focused on that, and it builds over time. Is this what you're saying?
Yeah, I wouldn't put it in exactly those terms, but yes. I mean, I think focus is very important, and consistency is very important. So obviously, in terms of developing the expertise, you need to spend the time and gain the experience doing it. But in terms of the marketing part of it, you need to be consistently putting out your marketing message and putting out your value into the marketplace so that people notice that that's happening. And I can just tell you from personal experience that since I started doing this intentionally, I see it coming back. I mean, the number of people coming to my platform has increased dramatically because of the efforts that I've made on a consistent basis to put my name out there. So I think it's very, very important for people getting started to understand how important the marketing is and how the consistency is necessary.
One thing that I don't see that I don't see addressed too much is you kind of need a side source of income while you are doing this, right? Because otherwise you always depend on other people to kind of finance your deal. So you're always kind of in a dependency level. Would you agree with that?
Yeah, and I didn't get started that way. I wound up jumping into this with both feet and working out of savings, which is not the optimal way of doing things.
Me too.
I think you're right. If I were starting out today, with the if I were starting out today, having been in a high paying job that frankly admittedly I didn't like that much, but it provided a good source of income and good source of income for deals, I think I would start a little bit smaller than where I was and build up both my net worth and my network doing that. And I know people who've done that successfully, starting out with smaller properties in places like Baltimore, Maryland, or Troy, New York, or places like that, as they work at their job, until they reach the point where they've got that bare minimum of income that they need to ditch the main job and just focus on the real estate full time. But certainly it helps to have some source of income to depend on while you're learning how to do this. Or the other thing is, though, that I think there's also kind of a misconception out there. Like, people imagine that they're going to buy a few houses and then somehow they're going to support themselves on that. And maybe if they live in some parts of the country, that's possible. But if you live in, say, like a coastal city like New York or Boston or San Francisco, it's going to be very, very difficult to replace your income by doing, 3 units here and 4 units there. You're going to have to buy literally hundreds of properties to get to the point where you can survive on the cash flow. So the only really viable alternative is to learn how to syndicate deals. And that kind of returns to the skills we were talking about before, about networking and, being able to raise money and, showcasing your business to the public. If you can learn how to syndicate deals, then you can generate enough income fairly quickly to get rid of your full-time job and focus on real estate exclusively.
Because this also, as you know, all of us human beings is a little bit time biased, right? You need this thing now, and you don't actually know how long it's going to take. So it took you basically 3 years, rough estimate, right?
Absolutely. Yeah, it did 3 years to really get traction in the business.
So it's important for people to realize, to actually, when making a leap, and I went like Jonathan, I went with both feet, and let's see how the thing goes. Because I just don't know, I just can't do things half-hearted where I just have to go all in or it's nothing. So, but it's going to take time, it's going to build time, and people have to understand that if you are doing something that you're actually really serious, you have to look at people like Jonathan and understand it takes time to get the thing properly going. And one thing that I actually wanted to ask you is regarding books, because I read like a madman, and I always like to share my book list with people. So what have you been reading lately that you like to share with our listeners?
Oh God, I haven't really been reading anything relevant to real estate recently. It's been like a lot of history books and novels and stuff, which is kind of the things I like to read in my spare time. But if you're looking for like a book recommendation for your listeners, I'm going to recommend something that's a little bit unusual, because it has nothing to do with real estate, and it's not really a business book, but it has everything to do with business. And it's called The War of Art by Stephen Pressfield.
Yeah, I know that book. I know that book. I love that book. Book.
The War of Art is great for teaching you how to stay consistently focused on your craft. And in this case, your craft is real estate and running a business. And The War of Art is a book that I read over and over and over again, because it's a very simple message and it's very hard to put it into practice. So it's good to read it again and again to try to get that message like to stick,
Jonathan, is there anything else that we haven't covered that you like our European listeners to know?
Well, if they want to get in touch with me, the best place is at my business, which is Two Bridges Asset Management. So that's the website is www.twobridges, that's spelled out Two Bridges MGMT for management. And if you'd like to follow my blog, it's themortarblog.com, where you can read all about investing in real estate in the U.S.
So, Jonathan, thank you for joining us today. Hope to speak with you soon.
Thank you so much for having me on the show.
Okay, bye now.